Hello, everyone. I hope everyone had a great weekend. Stock market still seems to be playing out the same pattern as we expected it to basically play out. Probably going into Thursday with Janet Yellen, so I wouldn't expect too much. But overall, the Nasdaq slightly lower today. Volume was lower, so it was a pretty good pullback. NYSE, S&P 500, the same similar situation, pulling back on below average volume with a decent little rally off the intraday lows. Bottom line is that we're just still kind of stuck in between the lows of August 24th and the resistance areas of the July August lows. It's downtrending on the Russell 2000, make it even worse, but really those August lows are mainly in play for the S&P 500. It's the July lows that are going to act as resistance along with the 50 and 200-day moving average, and the Nasdaq, obviously July August lows, 50 200-day moving average, same thing. But remember, big move, still holding it off the pretty crazy. Man, it didn't look that bad, but in hindsight, it does kind of look like that was a bit extreme. I mean, I don't know why I didn't. I knew it was pretty bad, but I really didn't feel it was that extreme, even with the VIX jumping all the way up to 70 that day, which is, or 70, 50 that day. Sorry, this isn't 2008. And I guess that's just why I just didn't think it was that extreme overall. And it still doesn't appear that it's that extreme, but maybe it is. So maybe this consolidation pattern works itself higher. We'll see. The one thing I do know, what gives, it more credence that it definitely could, is that let's look at all the long positions that I've either missed or not taken. MOH was the first swing and a miss with it missing my limit orders, and I didn't split it up market limit, even though I saw it gapping up in the morning because we're in too volatile market to do that. It continues to work itself higher, and as you can see here, overall it's still up right around 5% since the long position. Even better, EDAP, which was a long signal here. Once again, I didn't chase the gap up because this is not a strong market, so I would rather let my limits work. I don't want to. Right now, to me, it's all about losing as little money as possible on the signals rather than making money, which is, I guess you could call it trading scared. But after doing this for a long time, I know for it to be trading smart because we're just not in a bullish time period. But we're starting to be proven, right more often than not. And EDAP now in 3 days has a 30% gain. Ouch. Kind of stings a little bit. Really wish I would have chased it now. But hindsight bias is perfect, and hindsight bias is pretty bad. You're basically working on information like you knew it was going to gap up and then definitely go higher. Guess what? You didn't. That's gambler's fallacy and hindsight bias. But EDAP, very nice. In a stronger market, at least half the order gets filled. In this market, not so much, but it continues to work. Then UWN, man, that's a long signal, guys, but I passed on it. It's a long signal only because we don't risk much if we're wrong. It's a 50-day moving average retake on a surge in BOP and volume. Very low risk trade, even though the chart's kind of volatile. The green BOP with the volume was confirmation. Immediately follow through the next day and more follow through today. Like I said, volatile, but now we'd be sitting on a nearly 9% gain in 2 days on this one, too. UWN was flagged. UWN was initially marked as a long and then taken away as I thought it was just too speculative, and I'm actually looking at it right now crossed out in my personal trading diary, so not good. And then there was DY. Of course, DY is a perfect speculator stock. Made this huge move with huge volume and a huge surge in BOP. But if you remember, the market, that was pretty good, but I wasn't too convinced. The V shape was a bit much, I thought, for me with DY, but perfect speculator stock. Anytime it makes a pocket pivot point signal move above the 50-day moving average, learning more and more and more the more I get familiar with the scan. It's only been really working for me since 2012 that it became my number one personal scan for looking for big winners, since the max green BOP and huge accumulation and flat price patterns are totally gone. But DY has performed very well since then, and by passing on it, we've missed out on a 15% gain. So once again, another stock that worked. And then one stock that I'm not too upset about passing on, but I flagged it on this day. It was still a little volatile in a more crazier bull market where everything's working. I take this signal, but not in this market. I mean, already a huge uptrend move, so that's positive number one. The breakout to new highs on surge of BOP and volume was good, but just seemed too extended in this kind of market. Just way too extended, from this pivot area. But 2 days later, 23% gain. So When I don't take a long position, they end up working. Whenever I take them, like EDN, they end up reversing, but they don't reverse that much, and the position's still good. But that's the way it is. I would always rather have taken all of those and gotten them, and then have EDN as the one. So, I'm starting to learn that you got to take a signal if you get a signal. And on that note, we have 3 this evening. While we do not have any sell signals, and the EDN was the closest one, but it's still holding above my first sell stop level 1314, so it's fine. I got an ad signal on FIX. This is its second ad signal following 824. We got an ad signal on September 2nd. It has remained true, and now we're getting a second ad signal on September 14th. Pocket pivot point signal, surge in volume. BOP is about even with the day before or the Friday session, so we still got nice green BOP. We got a volume surge, and we got a breakout here of this kind of flat base, kind of wedging short term, but it's a flat base. It's a base on base, an ascending base really. So whatever you want to call it, it's a consolidation pattern. That's what I like to call these, a consolidation pattern. You can go ahead and put a title behind it if you like. But pocket pivot point move as it tries to break out, so we don't risk much. Know if we're wrong. You can go ahead and be really brave on this position and use this as your final sell stop level. I don't think it should take out those lows of 27.64, but at least on the first half, half the sell stop is going to be at 28.27. Final sell stop will be at 27.64 on this ad signal of FIX. Only 1% account capital because it's Cansom quality stock, and it was also confirmed in my green BOP for 20-day scan, but only 1% because of the market. If this was a stronger tape, 2% definitely for this one as an ad signal. And then also a new long signal, HBCP, kind of speculative. It was initially found in my green BOP for 20-day scan. Doesn't even really have a huge volume surge. It's larger than the day before. It's below average, but it's an extremely low risk area. So let's say that tomorrow it has a 1% move on higher volume and a big surge in BOP. Well, I'm going to regret for not taking today's signal. So I'd rather take today's signal, limit order only, no limits, buy, stop. So just going to hope that it doesn't gap up huge. But limit order only. First sell stop is going to be below 24.68. Final sell stop is going to be below 24.46. It's only a 1% account signal, and it would have only been 0.5%. But after confirming in my green BOP for 20-day scan, I checked it out. And even though I haven't updated my overall WJ O'Neill Cansom scan, which looks for all stocks with EPS and relative strength over 70, following its most recent earnings report, HBCP now has a 72 EPS rating. I don't know what it was before, but it wasn't 70 before this most recent earnings announcement. And 2016 estimates are for over 100%. So HBCP is 1% of the account capital, 0.5 for initially being in the green BOP scan for 20 days, and then 0.5 for being confirmed as a Cansom stock now. So 1% in that, 1% in FIX, and then we got a hedge or a short signal. SMN, this is the ultra short basic materials, pocket pivot point signal, big surge in volume, max green BOP, but it's also a low volume candidate, so I don't recommend market orders, limit orders only. First sell stop below 38.40. Final sell stop below 36.70. This is your typical short position, 2.5%. Why is this bigger than the long positions? Because tomorrow we could have another 4 new long signals. We're not going to get another 4 new short signals. So whenever a short signal is made with these inverse positions, they're always going to be heavier amounts. But 2.5%, we still don't risk much on that position if we're wrong. FIX 1%, HBCP 1%. No sells.